Hi everyone, I'm Ken from CryptoTradingKS. Let's run the numbers. We can see in news headlines today, stocks shake off bank woes, set for a quarterly gain. How are the banks actually performing when we look at the top 15 US banks? Well, not too well. Banks too big to fail are gaining deposits, and smaller banks are losing it to the big banks. With the banking crisis, there's been a flight to safety. Depositors have been shifting their funds to the too big to fail banks. And we can see when we look at the top 10 European banks, they're not doing too well either. In news just out, Australian Big Four bank ANZ halts cash withdrawals from many branches. This of course is a global problem, not just in the US, not just in Europe, but everywhere. We've explored this many times on the channel. Banks simply, they don't have the money, and they actually never did, to make depositors whole. Banking is a Ponzi scheme, and it always has been. Ken, how could you say that? What do you know about finance? I have a finance degree. Anybody who's studied first and second year economics knows about the multiplier effect. Banks actually create credit. When they get $100, they have a reserve requirement that they must uphold. In this case, we're looking at $100 flowing in through the bank in stage 1, 10% in reserves. Total deposits, $100. People think it stops there. It doesn't. How do the banks make money? They actually make money on the difference between the interest rate they loan out at and the interest rate they pay deposits at. Banks are very curious animals, so let's do a 10% from the money that they're going to loan out in stage 2. Their reserves are $9. What you can actually see is the total deposits grow stage by stage by stage by stage. They've created from $100, $651.30 in this example. This is real, this is legal, this is a Ponzi scheme. When you turn $100 into $651, if somebody wants that $651 back, good luck. What do the banks need to do about this? Of course, they need to go to central bank digital currencies. They simply do not have the money. And speaking about that, Japan plans to form an expert panel to explore the digital yen. I like to let people know how the financial markets work because a lot of people just don't know. And that's fair enough. The hidden workings of the financial system are hidden. One thing that we saw when the US bank runs were occurring, credit spreads or the risk inside the financial system absolutely took off. With what's happening right now, they're starting to balance out. That's a good thing for the global economy. We don't want credit spreads going absolutely wild. If they go straight up the wall, we could consider a very sharp and nasty sell-off will occur. So far, we're not seeing this. That's good news. What caused this spike in credit risk? Well, it's basically inflation. Why is it inflation? I thought the Fed was to blame. Inflation gets out of control when demand exceeds supply. How do you bring supply and demand back into balance with each other? Sure, if you're the Fed, you destroy demand. And why was the Fed formed? It was formed to protect the banking system. Ken, that's not true. You're just bashing the banks. How bad of you? Can you prove it? Absolutely. Let's go to St. Louis Fed. The Federal Reserve System was initially created in 1913 to address these banking panics. Everything I say is backed up by data or charts, which is effectively the same thing. I always research what I talk about. Some more good news because as different countries hit peak inflation, they can start to pause rate increases. The Reserve Bank of Australia to pause its tightening cycle, that means increasing rates, at Tuesday's meeting. What about the Fed? What is it going to do in around 34 days? There's still a 52.5% probability that the Fed will raise by 25 basis points. And this is up from a 40.6% probability just one day ago. 1 week ago, it was 16.8%. So you can see that the probability of a 25 basis point increase has been increasing. With credit risks starting to top out, various actions by the regulators, actions by banks to stop withdrawals, such as by ANZ Bank. The banking system is starting to stabilize. How can you have a bank run if you don't give customers their money? It reminds me very much of the Jerry Seinfeld episode where George goes to the soup Nazi and George gets no soup for you.
Yes,
it's
please.
hilarious.
No soup for you.
We can say now that Australian bank ANZ said, no cash for you. As a result of these concerted efforts, and there are more efforts, of course the regulators have gone after crypto. Why are they going after crypto? Because that's an off-ramp. They need the money to stay in the banking system. After all, it's a Ponzi scheme. The official name for the Ponzi scheme of the banking system is called the Fractional Reserve Banking System. We've also seen that oil is surging up on Iraqi supply disruptions. Actually, what we see when we do the technicals, US oil has just come back and retested a level of short-term resistance. This is normal price action, but of course restrictions also help. One thing that we want to see more and more of is credit spreads, the risk inside the financial system coming down. We really, really want to see that. Everybody inside the banking system knows how the financial system works. Nothing I have said would come as a surprise to anybody with a financial, especially a banking background. Let's have a look at the main markets. We can see the VIX has been coming down. That's restored a bit of confidence inside the main markets, and we can see the Nasdaq going up. Bonds and yields still don't know what they're doing. And the dollar and gold are in a similar position. We talked about a rally in oil. You can see it's really not been that great, especially over the past 24 hours. But what we do see, and this is great, junk bonds and high yield corporate bonds are arcing up. That is fantastic. When they go up, risk on enters the markets. And what does that mean? Your beloved stocks go up. Your beloved indices, they go up too. It's a happy day. Of course, unless you're holding gold or perhaps the dollar or even bonds. Yeah, that can be a little bit problematic. It's good to see that inverse credit risk is actually starting to come back and getting close to challenging a level of short-term resistance. It's not over it yet, but this is very, very constructive. Bond option volatility is also improving. These are all positive signs. One of the biggest risk-on or risk-off indicators you can get is Bitcoin. Forget about junk bonds. Forget about high-yield corporate debt. Forget about the move. Bitcoin rocks their world. And Bitcoin recently has been doing a stealth rally. The year-to-date price change with Bitcoin, it's up 70%. The Nasdaq 100 up 19%. S&P 5.5 and WTI oil down 7.4. Oh, where's gold? Bloomberg, please. I think Peter Schiff may have had a word to Bloomberg to not put gold in there, not just right now. In yesterday's video, we said, could this continue? Bitcoin can give a very, very good sentiment on risk on or risk off. And one thing to note, the S&P 500 futures are showing a good deal of positive momentum. But as in all things, all prices move in a wave. This is a very sustained uptrend. A bit of a retracement is more than enough to actually consolidate buying power. People do like to take profits as well. One thing that we've been talking a lot about recently is the differential between the index and the futures. Looking at the S&P 500 futures and comparing it to the index can be a really, really good idea. You can see the S&P 500, when the S&P 500 index stopped trading, was just there. Now it's lower. What this actually means is the markets will register negative momentum. That means your beloved stocks could come down a little. This negative price momentum is being felt inside the crypto market as well, and there was a great deal of support around this current area. Bitcoin is currently trading at 27,809. One thing that we do see a lot of, we can lose a particular area, touch the smart money buy area below it, which would be around 26,666. Whoa, let's make it an interesting number. And then it actually taps it and comes back into retest that smart money sell level. These retests are very, very common. You can actually see it here. Just coming down, retesting, coming down, retesting. It's always on. This is why we say price is always moving in a wave, because it is. The masterclass students know this very, very well. There's been a lot of heat on the crypto market recently, and you know why. Because the regulators have to stop outflows of cash from the banking system into crypto. That's just not on. They need to safeguard those deposits because the deposits don't exist. And I wanted to show you something really interesting. Why banks are waging a digital wallet war with Apple. Apple is not even crypto. We can see the reason. Apple Pay is the only digital wallet that has charged banks a fee on transactions. Apple, how could you? The banks are the only ones who can charge fees. That's why they want to take over the crypto market, to charge fees. The banks have been saying the crypto is full of criminals, all those money launderers. Those stupid people making permanent transactions on an immutable blockchain. They're pretty dumb criminals, aren't they? What's this? Fed and the Treasury fine Wells Fargo for sanctions violations. I thought banks were ahead of all of this. I thought they were regulated. I thought they were under the SEC purview and Elizabeth Warren's loving embrace. Oops, apparently not. They're being fined $97.8 million. But surely this is just an isolated event. Oh no, what's this? 4 bankers convicted in case of Putin's cellist friend. That sounds interesting. The bankers, 3 Russian-born and 1 Swiss, were charged with breaking Swiss anti-money laundering laws, which they denied. See, bankers are crystal clean. It's just very dirty water. Of course, all the government regulation and all the actions of banks have slowed down crypto expansion. Actually, maybe not. OKX plans Australian expansion, citing huge appetite for crypto. Governments all around the world are turning their backs on crypto. That's funny. It's actually true. The Indonesian government looks to non-fungible tokens to preserve cultural heritage. NFTs are on the blockchain. That's all part of crypto. Crypto is here to stay. Sorry banks and sorry government, you've missed the boat. The SEC's Gary Gensler makes actually complying with whatever their laws are through the SEC absolutely untenable because he won't tell anybody what they are. But Kraken aims for restricted dealer registration in Canada to comply with new rules. What happens when all the crypto exchanges actually abide by these particular rules? Well, the banks will have no leg left to stand on. Okay, enough of banks. I'm having a field day with banks at the present time. The banking system is, of course, absolutely integral to economic growth and economic development. They just need to keep up with the times, and banks are not very good at that. Incredibly bad, actually. Let's have a look at the SP 500 futures and pop it on this chart. The white line is the SP 500 futures, and what is that reading? 40.81 and 25 cents. We know all about these gaps inside the markets, so the SP 500 should actually open around the 40.81 mark. This is very, very good. Why is it good? Ken, why is it good? Because if you look at this resistance line, this is a fundamental first level resistance which was passed around the 24th of March. This is the secondary resistance. Hey, why don't I change the color scheme? Ah, that's better. Now, what can we actually see here? We can see the S&P 500 has broken out of that resistance and it's continued up as well. This is terrific, and it's largely because a lot of people feel the banking crisis has been contained, and let's hope that it has. It doesn't stop the problematic nature of the banking system. But we can see the S&P 500 futures are pointing towards a bit of a gap up. But Ken, before you said there was negative pressure, negative momentum. There was a bit of a blow up here and negative momentum inside the S&P 500. What that actually means is even though the S&P 500 closed at 40.50 and 82 cents and the S&P 500 futures are 40.81 and 25 cents, which is actually above it, this negative kind of momentum could create follow through when the markets open. Just something that you should be aware of. The S&P 500 is at a critical juncture in time. We must see it continue to move up. If we get a breakdown back into this 38.78 or 39.39 level, that shows that the S&P 500 is actually wavering. We do not want that. What you will find with all indicators, they phase in and out. Before, we saw that there was an inverse relationship between the S&P 500 and Bitcoin and gold. Now it's starting to coincide. This typically happens when things get overextended, and it can mark a changing of the guards. You must be flexible inside financial markets. And one thing that we see with gold right now, this smart money sell level didn't actually bounce up. Gold has come down, retested. Could it actually come back through? Yes, it could. Gold is currently trading at 1976 and 59. If we get positive momentum to the upside, either a retest or a breakout of the 1981 level, that is very, very good. That's what we want to see with gold. But if we actually challenge this lower smart money buy level around 1970 to 1971.65, we could get a bounce from that. Always keep in mind your three-dimensional thinking. Have your positions marked out. Know what you will do ahead of time. That's what all professionals do. So, for example, if you saw a climactic sell down and you said, I don't know what to do, I don't know what to do, what should I do? What's actually happened there? You haven't made up your mind ahead of time. All professionals make up their minds ahead of time in three different dimensions. Retail trading and investing is one-dimensional thinking, and that's why they often get financially slaughtered. If you want to protect yourself against this, just do three-dimensional thinking. But how do you do that? I invented the CTKS code because I wanted to help people do daily three-dimensional risk management thinking. It's important to understand the markets are always moving in a wave. They can go down, they can go neutral for a time, and they can go up, all in the span of 24 hours. Realistically, it depends on what part of the world you're in terms of how your CTKS code actually plays out. You want to look at what the market has been doing in the past 24 hours. Then in your time zone, you want to figure out where the market could go. Then you need to understand if the market goes in this direction, this is down with a 70% probability. You want to put the dominant probability up in here, this little area. Your portfolio is literally the entire portfolio that you have. You can also do this with a particular trade or particular investment, but it's important to know what you will do with your entire portfolio. Before anything climactic, either a breakout that catches you off guard or a breakdown that catches you off guard. What you will find is a certain percentage of your portfolio will move in the direction of the market. Some of your portfolio, especially if it's in cash, won't do anything. And some, if it's in inverters, will move in the opposite direction. This is literally just your portfolio broken up between those things that move with the market, those things that don't move at all, and move opposite to the market. The key to always remember, your synchronization will be rewarded. If you're synchronized in with the market, you're going to make beautiful returns. If you're desynchronized, you're going to pay those who are synchronized. If you are synchronized, the desynchronized will pay you. Is it bad for somebody else to pay you for being in sync? One of the things that we talk about extensively inside the masterclass, and you can see a bit of a window on it in this particular video, there's so many things that you need to look at to become synchronized. Synchronization is an absolute application of knowledge. And in the markets, the most knowledgeable win. But it's a little bit more than that. You must be very, very knowledgeable, but you must control your emotions too. That's why we talk about positive excellence. You can know all the good things to do inside the market, but if your nerves get the better of you, you're going to sell and buy at the wrong times. Financial markets can be utterly perplexing. I developed the CTKS method to help people to know where the smart money is buying and selling. Let's look at the DXY. What's happening with the DXY at the moment? Well, it came down, wobbled around a bit, and it has gone up. But why did it do this? Why DXY? Why? The only way we can really tell is to look through the CTKS method. What does this method tell us? It tells where the smart money is buying or selling. Look at the DXY. It came back into this area of smart money support from 102.083. It hit that, tapped it, hit it again, tapped it. And what is it doing? It's going up for a retest. A retest of what? This smart money sell level from 102.619 to 102.768. And the DXY is currently 102.450. The more that you get familiar with the CTKS method, the more that you'll understand the price is always ping-ponging between a smart money sell level and a buy level, a sell level and a buy level. If it starts to retrace and doesn't get up to the sell level, what that basically means, we can look at it right here. What it means is the sell pressure, the negative price momentum is far, far too great. It's going to make its way down. But when it finds support, it's going to make its way up. But that doesn't mean instantaneously. Sometimes the sellers just get so strong that the buyers step in and they flatten our price. But when the sellers have been exhausted, the buyers have their time and they say, "Ha ha, sellers, I'm going up." They literally do say that. I've heard them. A lot of people have been asking about NVDA. When we look at NVDA without the CTKS method turned on, what do we see here? Well, really not much. If you want to know where the smart money is buying and selling, you need the CTKS method. So let's turn it on. What does this actually tell us with NVIDIA stock, which closed its trading at 273.87? It has smart money support below it from 269.66 to 273.15. We know that there's positive momentum on the SP500. Therefore, we expect NVIDIA to gap up. But what do we also notice? Something not so good with NVIDIA. From 284.33 upwards, there's an absolute mass of sell level resistance. That's where the smart money will make it tough for NVIDIA to get through. In cases like this, we would expect NVIDIA to actually consolidate around this particular price channel that it's in. It could even dip down, but with our three-dimensional thinking, we also prepare for the possibility that NVIDIA could come up and crush through that particular sell level. And when you get shorts liquidating, you can actually go up really, really high, really, really fast. And we saw that recently with XRP. What you'll actually find, the markets are all about pattern recognition. The more charts that you look at, the more charts you understand, the better off you will be, because you'll be synchronized in with the market. You're actually like a tracker reading the footprints of price action. A lot of people have been reaching out and saying, Ken, can you do ADA? Absolutely, let's do ADA together. What we can see is ADA is just flatlining at the moment. It's tried to spike up, it's hit resistance. What is the smart money doing with ADA? The only way we can tell is to do the CTKS method. Let's turn it on. What do we actually see here? ADA is currently 383. And when we look at ADA's price, it's literally just a little bit nearly in the middle of a smart money buy area because of how it's acting, from 377 to 384. You can see that it's following Bitcoin's gravity. It's getting a little bit hit, but it's also inverting. This is fairly interesting stuff. ADA might be trying to show some power, but it has smart money sell levels above it. And this is a bit of a problem to ADA. When you get a smart money sell level, it stops the price from moving up easily. Why is that? Because there are a lot of sellers there saying, no, I'm going to sell you down. Or alternately, there are a lot of buyers who want to take profits at those levels because they think it's reasonable. Please let me know in the comments, do you think ADA is a buy or a sell? Let's have a look at XRP through the lens of the CTKS method. One thing that you'll note, XRP just went parabolic. It crushed different sell levels, liquidating the shorts as it went. And then all of a sudden, the buyers ran out, and that causes these long spikes. What are the long spikes? What do they mean? It means that the longs are getting liquidated in the market. When a long gets liquidated, they have to sell. If enough of them get liquidated, what happens? A mass of sell action. What happens when shorts get liquidated? They have to buy. What happens when you have a ton of buyers all stepping in because they're getting liquidated? You can see it. You can see it clearly on the charts. This is where you get spikes. Now, what has XRP been doing? It's been recovering or consolidating from this massive move up, and it's really been a fantastic move for XRP. With the CTKS method, we get our X-ray vision. We get to see inside market structure. XRP is currently trading at 53.52, and we can see this particular area here between 55.30 and 55.67 has been a very, very substantial area of resistance. Why is it resistance? Why isn't it support? Because resistance always pushes the price down. What does support do? Support pushes the price up. The two are very different. And if you're not quite sure on what the terms mean, it's really, really important that you learn all about everything you can to know about support and resistance. If you don't know or don't understand those terms, the market will continuously desynchronize you. And you know what happens then? What we've seen here is a consolidation action after this large uptick, this explosion in price. XRP is just consolidating at the moment. And if you watched yesterday's video, you will know the resistance above this current resistance that I just showed you. And if you're marking up your charts with the CTKS method, you already know. There are two component pieces to understand when it becomes an issue that you want to trade or invest professionally. You must have the knowledge, but you also must have the emotional control. If your emotions control you, you will always be buying and selling at the wrong times. That's why we have positive excellence. You literally cannot do technical analysis without the emotional side under control. Most people fail on their trading journey because this is not taught anywhere. but it should be the first thing that is taught. But when people get into financial markets, they just want to get 1,000x or 1,000,000x. They want to turn 1 cent into $1 trillion. Just like the banks do. But unfortunately, the banks are the only ones that can do it. Ken, are you talking about the banks again? Actually, the reason that I'm doing these videos later, I was just getting far too tired. This is actually me when I get some energy. I love to have fun and muck around. Okay, back to some serious stuff. Positive excellence. Why do we need it? Why would we even bother? Aren't we after 100x from some obscure thing that nobody's ever heard of, and that's why you need to buy it? Please beware. Those kind of things are sucker bait. It doesn't mean it won't happen, but it generally means it typically doesn't happen. You end up losing everything, literally. They're not called 1,000 to 1 odds for no reason. What we do with positive excellence, we just put money last because money is an outcome. Money is a result of what you actually do. If you put money, for example, if you're going to work and you say, I put money first, you're going to be saying to your boss every 5 minutes, pay me, pay me. I just put in 5 minutes of work, pay me. I just did half an hour, pay me. Very soon you're going to get fired. You're not at work to actually receive a wage. You're at work to provide value. You're at work to provide your skills, your special talents. That should be the reason that you are there. I would suggest if you're going to work and it deadens you inside, look for another job. Why? Because life is too short. There are ways of cutting over jobs without endangering your current financial future. Don't live a zombie life. Live a life with meaning, with happiness and fulfillment. All the people around you need you that way. In yesterday's video, I said, what is the opposite of learning? And a lot of people were outstanding. They got it. They pinned it absolutely. It's blame. If we're not learning, we're blaming. And what does blame do? It is the powerhouse of disempowerment. What does that actually mean? If you're not learning, you're blaming. And if you're blaming, you're disempowering yourself. You've put your future somewhere else, but not inside your own hands. Somebody else is to blame. Therefore, they're puppeting you. Hell no! Cut those puppet cords, please. As a global family, we just don't stand for that. Learning is the way to empower yourself. It's very, very important. And I also said to our beloved global family, what is the opposite of inner peace and outer peace? Inner peace, the opposite of that is conflict. What is the opposite of outer peace? It's anxiety, depression, guilt and shame. It's all bad. It's really, really bad for your health. You can see positive excellence is not just a way to live life, but it's a way to live life happy and longer, because your body cannot handle blame. It cannot handle conflict, and it certainly can't handle anxiety. Guilt and shame are terrible, terrible things that people feel. And they often feel that because other people have said they're to blame. We don't blame others and we don't blame ourselves. We just learn. We learn from others and we learn from ourselves, our own actions. What does this culminate in? Gratitude. If you're grateful, you will be happy. If you've got gratefulness and happiness, you will be kind. But your kindness is not stupid. It's not idiotic. You have strength and boundaries. You've got the capability of stepping in and putting someone in their place. That's very, very important. But when you have to do that, you do it with kindness. You do it with positive excellence, not with conflict. Unless it's required, and then you go for it. This is an important thing to understand. A lot of people think that being kind actually precludes you. It stops you from putting in boundaries. Nothing could be further from the truth. I think that would be a really good thing to discuss. Have you got into a problem where you think, I need to actually say no to someone, but your kindness stops you? Or do you get into the opposite case where you need to say no to someone and you get into a fight? Your conflict undermines you. The other person feels bad, and so do you. This is really good to discuss. It's all about boundaries. Having boundaries in your trading and investing is very, very important as well. Remember how I talked about the CTKS code? I said, know what you will do if the price goes down, goes against you, if it goes nowhere, or if it goes for you. That's all about boundaries. If you don't have boundaries, you cannot make those kinds of decisions. You can see positive excellence applies to everything, not just trading and investing. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. These are just fragments of the CTKS creed, but they're so powerful. If you keep on repeating those to yourself, your life will change for the absolute better. Your relationships will improve. Your working environment will improve. Everything will improve. And of course, your happiness will improve. And that's really, really important. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again tomorrow. Bye for now.